Welcome back to Candlestick Signals for today's market. August 18th, 2025, we're diving deep into the candlestick signals that are shaping today's trading landscape. Buckle up, because we've got some fascinating patterns emerging that could significantly impact your investment strategy. Let's kick things off with a market snapshot. The major U.S. indices have shown remarkable resilience through mid-August 2025. The Dow Jones Industrial Average reached a record intraday high of 45,283 at 2:15 p.m. Eastern Time on August 15th, sending shockwaves through the financial world. Meanwhile, the S&P 500 and Nasdaq Composite have been riding the same wave of upward momentum, buoyed by better-than-expected inflation data and the tantalizing prospect of a potential Federal Reserve rate cut. Despite some intraday fluctuations, particularly weakness in the semiconductor sector and softer consumer sentiment, the overarching market trend remains positive for the week. Investors continue to demonstrate their faith by persistently buying the dips. Now let's delve into the candlestick structures that are painting a vivid picture of today's market dynamics. We've observed some intriguing formations that reflect the recent volatility and rotation between sectors. Bullish engulfing patterns have emerged on several indices recently, signaling strong reversals and momentum at key support zones. These patterns are like beacons of hope for bulls, suggesting that buying interest is returning after temporary pullbacks. However, it's not all smooth sailing. Hanging man and dragonfly bearish patterns were spotted last week in growth sectors, serving as a cautionary tale as indices reached new highs. These formations are like red flags waving in the wind, warning of possible topping or profit-taking, especially as rally energy fades in high-beta areas like technology. Adding to the complexity, we've seen Doji variants, including Doji Star bearish and morning Doji Star, appearing in both major indices and large-cap tech stocks. These formations are like crossroads in the market, highlighting indecision and possible transition points. They often occur closer to record highs or after big news events, and we've frequently observed them in both financials and consumer discretionary stocks this week. Let's break down the technical interpretation of these patterns. The bullish engulfing pattern is a powerful signal that suggests buying interest is returning after temporary pullbacks. It's typically seen near support levels and often precedes rallies. On the flip side, the hanging man formation, when forming at highs, warns of possible topping or profit-taking. This is especially concerning as rally energy fades in high-beta areas like technology. The Doji Star and morning Doji Star patterns reflect increased uncertainty. These formations are like weather vanes, often occurring closer to record highs or after significant news events. We've seen them prominently in both financials and consumer discretionary stocks this week, underscoring the market's indecision. Sector rotation has been a key theme, with technical action in chips, solar, and human resources tech experiencing pronounced candlestick swings. Chip stocks faced selling pressure, evidenced by notably negative candlesticks. In contrast, solar and HR software names experienced bullish reversals, painting a picture of shifting investor sentiment across different industries. Now, let's spotlight some sector and stock highlights. Solar power sector has been a beacon of positivity, with NextEra Energy, NE, AES Corp, AES, and Sunrun showing strong bullish candlestick signals after favorable regulatory news. These stocks have seen impressive gains, with NE up 7.2% and a market cap increase of $6.3 billion. He's surging 9.1% for a $1.8 billion market cap boost, and Run skyrocketing 12.5%, adding $420 million to its market value. In the human resources tech space, Dayforce has been a standout performer. The stock surged with a notable bullish engulfing pattern and heavy volume on acquisition speculations, climbing 15.3% and adding $1.2 billion to its market capitalization. However, it's not all sunshine and roses. The semiconductors and crypto sectors have been noted for late-week bearish candlestick signals, hinting at a cooling trend and vulnerability to weaker sentiment. Major chip stocks saw declines, with industry leader NVIDIA dropping 3.8%. Wiping $46 billion off its market cap. The financials and tech sectors have shown mixed performances, with several banks and large techs displaying doji and engulfing formations. This underscores defensive behavior and indecision ahead of anticipated Fed commentary. JP Morgan Chase, for instance, formed a doji pattern and ended the day flat.
Ow.
While Apple showed a bearish engulfing pattern, dropping 1.2% and losing $38 billion in market value. Investor sentiment remains cautiously optimistic. Riding the momentum of anticipated interest rate cuts and robust inflation data. However, this optimism is tempered by a rebound in producer prices and mixed earnings, which triggered the appearance of reversal candlestick patterns. The volatility index VIX is below average at 15.1. Aligning with historically bullish conditions and the buy-thud dip, psychology prevalent among retail and institutional traders. Looking at major candlestick formations by industry capitalization, we see a diverse landscape. In the technology sector, large caps are showing Doji star bearish and hanging man patterns, while mid caps display bullish engulfing signals. The financial sector sees bullish engulfing in large caps, morning Doji star in mid caps, and Doji star in small caps. Energy and utilities present a bullish hammer in large caps, engulfing bearish in mid caps, and morning star in small caps. Consumer discretionary stocks show engulfing bearish patterns in large caps, bullish engulfing in mid caps, and inverted hammer in small caps. The healthcare sector displays morning Doji star in large caps, hanging man in mid caps, and harami bullish in small caps. To summarize the key indices and sectors, the Dow Jones shows a bullish engulfing pattern, implying uptrend continuation and optimistic sentiment. The S&P 500 displays doji and engulfing patterns, suggesting indecision and rotation with mixed sentiment. The Nasdaq Composite exhibits a hanging man pattern, indicating caution at highs and slightly weaker sentiment. In sector-specific movements, solar power demonstrates bullish reversal patterns, reflecting a regulatory boost and very positive sentiment. The semiconductor sector shows bearish signals indicating weakness after records and softening sentiment. Financials display doji and engulfing patterns, suggesting a defensive posture and uncertain sentiment. In conclusion, today's candlestick analysis, sector rotations, and sentiment metrics suggest continued upward momentum in large indices. Though select sectors, especially technology and semiconductors, show increased vulnerability signaled by bearish candlestick formations. The bullish cases in solar and HR tech stocks highlight the impact of news-driven flows and sector headlines. As we wrap up this analysis, remember that the market is a dynamic entity, constantly evolving and presenting new opportunities and challenges. Traders should remain vigilant, watching for key reversal signals, and maintaining flexibility as Fed speculation and inflation readings drive sentiment shifts through late August. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. Stay tuned for our next update, where we continue to decode the market's candlestick language and help you navigate these exciting financial waters. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.